Hello, ladies and gentlemen. I am the Acca tutor, your number one Acca mentor and Acca knowledge agent. All right, from Transcal Consulting Services. I am the lead Acca tutor there, which means you have got a lot to benefit from me as far as learning Acca is concerned. All right, in this our first week video lecture, we are going to touch on the matters with regards to the nature and purpose of cost and management accounting and management information. All right, before I go deeper, ladies and gentlemen, those are my credentials to those who have just started learning from me or from us, Transcal Consulting Services. So those are credentials. You can contact me on those numbers or the email as you can see there. All right, without wasting much of your time, let us go straight into the matters of the day. As I've indicated, ladies and gentlemen, the purpose of this lecture is to have us being introduced to the nature and the purpose of cost and management accounting, including the business environment the management accountant finds himself in and with which he has to acquaint himself. So those are the two major areas we are going to touch on. All right, the first one being that being the business organizations and accounting systems, and then management information, the introduction part of it. All right, before we even go deeper, there is this point I want to put across, that it is very, very important for a student to listen and listen very carefully to issues which are highlighted on the first week lecture in whatever Acca module he will be studying, because this is where you learn of the basic foundations which underpin a particular module. For example, in this case, our module, the Acca MA1, we are being, right, in this management information module, we are being given the foundation. All right, the purpose of this first week lecture is for us to understand what management information is all about in general. Okay, so the first week will lay everything you need to stand on for you to proceed on this journey, for you to navigate the intellectual territory with regard to management accounting. You will discover as you go that this was the best module ever for you to grasp all the concepts related to management accounting. So I want you to just listen and listen very good. The objectives of the presentation. By the end of the presentation, students should be able to describe the organization and main functions of an office as a center for information and administration. Describe the function and use of a manual of policies, procedures, and best practices. Identify the main types of transactions undertaken by a business and the key personnel involved in initiating, processing, and completing transactions. Explain the need for effective control over transactions. Explain and illustrate the principles and practice of double entry bookkeeping. Describe and illustrate the use of ledgers and primary entry records in both integrated and interlocking accounting systems. Lastly, identify the key features, function, and benefits of a computerized accounting system. So these are the only objectives we are going to discuss about. Now, what is an organization? And what are the main functions of an office as a center for information and administration? An organization can be defined as a social arrangement which pursues collective goals, which controls own performance, and which has a boundary separating it from its environment. So there is a boundary. Okay? So you can see from this definition that an organization is actually a grouping of individuals. So by being a social arrangement, there is involvement of people. In this particular setup, there are individuals, there are interactions that come into play. Alright? There is an issue of collective goals. There should be some unity of purpose. Unity of purpose. Alright? An organization is actually a very organized setup. Alright? Where people have to have a common purpose. The organization should also be able to control own performance. It should be able to control own performance. I want you to look at it this way. Suppose there are two organizations. There is one, ESCOM, okay, ESCOM, which deals with the supply of electricity. And then there is another organization called ZNA, the Zimbabwe National Army. Alright? These organizations are also part of the definition of an organization. But you will discover that the performance of ESCOM should only be controlled by ESCOM. There shouldn't be some involvement of third parties which are overseeing it or which are detecting how they should work. Similarly, the ZNA, the Zimbabwe National Army, is going to operate on its own rules. Okay? On its own rules. It sets itself targets to achieve and so on. Nobody should come from the outside and detect the Zimbabwe National Army how to do the work. Alright, so this means that if the ZNA or another company or another organization is now on top of the ZNA or the ESCOM in their way of doing business, then the only organization that is there is the top one, the one that is in control. But ladies and gentlemen, I want you to see this. There are other people who are called regulators. The regulators, obviously, they are going to be on top, but this is only it's only a setup where these people would be acting to with regards to compliance issues. All right, because by the end of the day, if business organizations are not supervised, maybe the public might end up being victimized. So there should be some regulator on top to see if some of these organizations are operating within the limits of the law. However, that does not mean that the oversight is excessive. All right, because if the oversight is excessive, then there won't be any business at all. Remember, there is what is called at law the corporate veil. The corporate veil. This means that companies themselves or those establishments which are there in terms of the law or legal persons. Let me just say legal persons or corporate fictions. These legal persons, they have got what is called they've got what is called limited liability. Okay, rights. Just like individuals, these legal persons, they also have got rights. Okay, those rights are part of the concept of the corporate veil. They've got rights to privacy, rights to confidentiality, rights to do their own business, as long as those businesses would be within the limits of the law. They've got those rights. So this is why organizations should have control over own performance. If they can't control their performance, they are not organizations. They cease to be organizations. Okay? Then the last part, boundary, separating it from its environment. Going back, let us go back to the ESCOM ZNA example. You can see that there are some features which will tell that this is now a jurisdiction for ESCOM and this is the jurisdiction for the Army. Okay? There are certain conditions which must exist to show that if you reach this limit, you are now exceeding your boundary. All right? Or if you are now exceeding this limit, you are now encroaching into our territory. All right? So, for example, we know that ESCOM, in this particular example, deals in the supply of electricity. Okay? Deals in the supply of electricity. But what if ESCOM is now being blamed for poor network in the country in which it is operating? For example, in South Africa, this ESCOM would be blamed. Is now being blamed for the poor performance of a cell phone network, which should be a blame for Vodacom or on Cell C. Then there is a problem. Okay? There should be some boundary in the way a business organization operates. Okay? So, even if there could be so many business organizations supplying the same things, you will discover that there is always going to be some boundary. And this boundary can come in the form of the way they brand themselves. Okay? In the way they brand themselves, in the way they clothe themselves, some put on uniforms, and so forth. Even the way they handle their customers, there could be some way of distinguishing themselves. All right? So that's how a boundary can be established. All right? So businesses like companies and partnership, clubs, schools, charities, etc., they are all organizations. All right? Why? Because they are social arrangements. They pursue collective goals, and control their own performance, okay, and have got a boundary separating them from their environment. You can actually easily see that this one is a school, all right, by the way it does its things, all right. You can see that no, this is their demarcation, this is where they end or begin, all right. You can also see that they are the ones in charge of their performance. Now, much of that, let us now talk of an office. An office in an organization is the center for information and administration. All right, you will see that the business organization will be this one, this big, 0. And then we have an office here. Okay, that's the office. This should be the center. Okay, this is the center of information to support this wall 0. Okay, this wall apple. You can see it as an apple or as a mango. All right. So the office distributes the information, is the center for information as well as administration of the business. So be it a large company, be it ESCOM, be it ZNA, they all have got some offices from which they do their administration or they disseminate information, usually centrally. All right. Now, the most common functions in an office are purchasing, personnel or human resources, general administration, finance, sales, and marketing. But the question now that comes into play is, should these offices be central or decentral? Okay? Should they be central or decentralized? Okay? Centralized or decentralized. Now, when I talk of an office being centralized, let me just try to erase these things. All right? But bear in mind that we still have got our ESCOM and ZNA example at play. Okay, these companies are being used here just for the purpose of learning, all right. These business organizations, these organizations rather, all right. We have highlighted that in a particular organization, the office could be there for the purpose of purchasing or personnel management, that is human resources, and general administration, as well as the finance and sales and marketing functions. All right. But the question that comes into play is, should these offices be centralized or decentralized? By being centralized, we are saying that for the whole, for example, for the whole country, this particular organization will be having only one office that is centralized, maybe in a capital city. And then we've got some, sub offices which do not control much of the doing or much of the work or much of the operations. They have to rely on the head office for everything. They have to ask the command. All right, that one is essential for companies for organizations like the ZNA, the Zimbabwe National Army. But at the end of the day, they have to operate on a from a central office. That's in military organization. That's the very common issue. All right, but you will discover as well that there is also some legal decentralization that take place, where the power is distributed to some provincial heads. Okay, because a complete centralized setup might be very inefficient in the way operations are conducted. So the command of the army should design a system where they give certain individuals in particular provinces or jurisdictions some power. All right. Then, in the case of the ESCOM, okay, in the case of the ESCOM company, this one is an electricity supply authority, okay, in the South African, in South Africa. So this company is highly likely to have larger parts of offices, larger offices in each, distributed around the country. All right, where these offices, they have got some autonomy in the way they do. They can even make decisions across other offices. With other offices, without necessarily depend on the head office. That's decentralization. Power is given to various individuals down the ladder. Okay, even those guys below are also given some power to do certain administrative work. All right. Now, the question that might come in the exam is, what is the advantage of centralization? What is the disadvantage of it? Then we go to decentralization. You need to pinpoint the advantages as well as the disadvantages of it to an office. For example, a centralized office has got an advantage of being in power. There is consolidation of power where the office has got control of what is happening. Remember, by the end of the day, an organization should be able to control its performance. So if we are having a centralized office, then it means that the leaders have got much control over the performance of subordinates. There's also another advantage where there is no distortion of information and protocols. All right, when instructions are given, they usually come clear and are implemented in a more efficient way. But there is also a problem. If we are only going to rely on the head office, it means that problems at the local or on the ground, which are occurring, let's say, in the north part of the country, but not affecting the south part or the western part, then you would see that it takes time for those problems to be addressed, or they might be delayed as they are not urgent issues to other parts of the country. So you would see that centralization is not all perfect. Let's go to decentralization. I'm just highlighting a few of those advantages and disadvantages. Now, to decentralization, you discover that there is more motivation to junior managers, okay, because they are also being given some power to exercise. Right, so there is motivation, there is an issue of attending to local problems as quickly as possible without relying on the final say of top management at the head office. There is motivation, there is efficiency. There's also an issue of brand, brand exaltation, where the brand itself, because when customers are being attended to, when they are they are having their problems being attended to as quickly as possible. This motivates them to come and continue doing business with us. But when they are facing a situation where they are being told that, oh, we are still waiting for the head office to give us a final answer, we are still waiting for the head office to say this, then the customers, it destroys customer goodwill and loyalty. Now, what about the disadvantages? The disadvantages are that by the end of the day, especially in a military organization, the leaders are likely to lose control because the juniors might get too pedantic and adventurous and start to disobey orders because they feel that they also have the power. All right. Then there is also an issue of distortion of information down the line because you would see that as these individuals, for example, this one is L, is Y, this one is X, this one is A, that one is B, they all have got the same power. So by the end of the day, there is an issue of distortion of communication, right? What A claims could not be what B claims to be, all right? And there would also be some conflicts right around the group, as some individuals might think they've got more power than others because they are people on the ground in their own jurisdiction there. So there are a lot of disadvantages you should have to come up, you should have to learn to say or to pinpoint whenever you are given a question about the centralization or decentralization of an office. Now, let's talk of the organizational chart. Organization charts are a traditional way of depicting the various roles and responsibility relationships of the formal structure. They are a simplified and standardized way of showing the units, for example, departments, into which the organization is divided and how they relate to each other. Formal communication and reporting channels. The structure of authority, responsibility, and delegation. Any problems in the areas such as excessively long lines of communication, lack of coordination between units, or unclear areas of authority. So, when you're talking of an organizational chart, we are referring to something something like this one. All right. For example, let's talk of a company like Pick and Pay. Pick and Pay. All right. It is a chain of supermarkets. We know that. We all know that. All right. So the organizational chart of Pick and Pay would be having or can be having something like this. There is a CEO on top. Okay, there is a CEO on top, or a managing director, and then we have got some deputies. Okay, deputy direct. Deputy. The CEO. There is. Let me just say. Okay, deputy director here. Deputy director, let's say HRM, and the deputy director finance. Okay, so they all report to this chief executive officer, who might also be called managing director, depending on the company. Some MD managing director there. All right, and let me just remove the director here. Let us just say deputy managing director and deputy managing director here. All right, deputy managing director, human resources management, deputy managing director, finance. All right, these could also be having their own subordinates. All right, they could be having their own subordinates down the line. All right, so but basically that's what we'll be referring to. This is just a structure, a traditional way of depicting the various roles and relationships of the formal structure. They are a simplified and standardized way of showing the units, for example, department into which the organization is divided and how they relate to each other. All right, so as you can see here, in terms of relationship, we can easily see that the CEO or managing director is at the top, being followed by the deputy managing directors. Okay, deputy managing directors there, for example, the HRM and the finance. But we can easily see that these guys here, they are of the same rank. Okay, they are of the same rank, but they are all below the MD. Okay, they are all below the MD. There could be some various, for example, there is now say the manager. We can just now have manager HRM, manager finance. Here we now have manager finance and manager purchasing. Okay, purchasing is applied, manager marketing. Okay, manager marketing. There is now manager marketing. We can call, and we now have accountant. Here we now have the auditor and so forth. All right, so you can see that these guys, the internal auditor, the accountant, they are now of the same, of the same rank. Okay, so that shows the relationship between them and so forth. The structure of authority, responsibility, and delegation. Okay, now there is now an issue of knowing whether an organization's departments are functional, are following some functional or some other form, for example, divisional and so forth. All right, so we need to understand what a functional organization looks like. All right, this one arranges departments by functions as can be seen below. We need to just draw what this functional organization looks like, but it's more or less the same as what I have just drawn there. But let me just try to come up with, I said on top there should be some CEO guy, and below him or her there could be some directors, for example, finance director, marketing director, finance director, HR director, okay, HR director, IT director, and production director. Okay, these guys would be having their own deputies. Okay, own deputies. They could be having their own deputies, right? But you can see that even if they will be having deputies, the deputies would be reporting So this is just the same. Okay, they would be reporting to their relevant directors, and those directors will then report to the CEO. All right. Now, so why are they? Is this called a functional setup? How or why is it going to end up being called so? You can see that these are functions. These are the functions. Those directors will be leaders of the departments. Those departments are called functions. All right. For example, we've got the marketing function, the finance function, the HR function, the IT function or department, and then the production department. That's the reason this setup is called a functional organization. The departments are arranged by functions. Now, let's talk of divisional organization. Divisions are often determined by geographical area. For example, a European division and an Asian division, or by product. For example, a car division and a truck division. If you look at companies like, for example, the Nissan, all right, the Nissan car manufacturing company, it has got both the car as well as the truck division. They do produce luxury cars as well as commercial trucks. All right, there are some UD trucks and so forth, which are usually considered good trucks to the industrialists. But when it comes to those who like snob lifestyle, we also have got the Nissan cars, which are also competitive on the market. They're actually some of the best cars in the world. All right. So now a divisional organization, as indicated here, could be by geography or by the product line. All right. So it looks like this. There is usually a main board at the top, followed by divisional boards. Okay, divisional boards. For example, division A and division B. These divisions will be having now their own functions. For example, the sales, the R&D, the finance, etc. Here again, they have got their own sales, the finance, etc. They run their own affairs, but by the end of the day, they have to report to the main board. All right, so this could be the car division, and this could be the trucks division. I'm sure you have understood everything there. Now that this statement, the divisional arrangement can allow each division to specialize. Yes, specialization is being encouraged because these guys are concentrating on the manufacture of cars, whilst these ones are concentrating on the manufacture of trucks, which means the personnel which are dedicated to this department or division are going to advance their skills related to the production of cars, which encourages specialization. Similarly here, the truck guys, the truck employees, the truck division employees, they are going to perfect their skills in the production of industrial trucks. So, divisional organizations encourage specialization. Now, As you would go down an organizational chart, there is usually less power and authority at each level. You have seen here that the lower we go down, the less the power. All right, the power is at the top. Power is at the top board, but it goes down and down and down as we go down. Therefore, there is a hierarchy of superiors and subordinates, and this allows organizations to be coordinated so that their collective goals can be achieved. It also allows responsibility and decision making to be spread down the organization. This is known as decentralization. And it leaves senior managers time to concentrate on the most important decision, whilst more junior staff will be heavy responsibility for less important matters. So this is another advantage of decentralization, where top hierarchy managers are given more time to concentrate on issues of strategy, whilst the lower level employees are doing the implementation and also are allowed to do some or to make some less significant decisions. Decentralizing or delegating responsibility to junior staff members can be very motivating. It motivates, as I've already indicated. Okay, it can be motivating for them and also allows specialist decisions to be made by appropriate experts. However, there is always a danger that decentralization results in poor coordination between departments, and decisions have to be monitored carefully. We have highlighted this situation where we say that because these guys below, they end up being, they are of the same authority level, they usually tend to fight or quarrel along the way. And there is also some issue of distortion which needs to be monitored by the end of the day. Okay. Now, the function and use of a manual of policies and procedures and best practice. Now, let's talk of policy manual or manual of policies. A policy manual should help to ensure that all personnel follow procedures and best practice. But what is a policy manual? This is more of a document that has been formally prepared by a company or an organization to lay out the operating procedures or rules which have to be observed by every employee within a firm or a company. So, in essence, policy manuals perform the following important functions. They give guidance to employees on holiday entitlement. For example, you are told the procedures you should follow to apply for a leave or to be awarded a leave or a time off. All right, and also it spells out your entitlements to holidays, leaves, and so forth. All right, how your days accumulate, your time off days, your holidays accumulate to you in each year. So a policy manual is the document that usually guides employees on those matters. It also speaks about the training and instruction. Okay, for example, on how to request a replacement of a piece of equipment, you have to refer to the policy manual for procedures to be followed. Uniformity of approach, for example, that all employees are subject to the same discipline, because there is a document in place that outlines how disciplinary procedures have to be conducted in the company. Then there is consistent or a uniform approach which would be applied to everybody. All right, but without a document, there would be a lot of discretion which would end up leaving other employees being harassed, whilst others would be allowed to go scot-free. But when we have a document in place, then it becomes a term of reference, and there would be consistency in the approach with regards to disciplinary procedures. Meeting legal requirements, for example, health and safety rules, you will discover that it is actually mandatory for certain organizations in particular industries to have a policy manual, especially when it comes to health and safety rules. Companies, for example, in the mining sector, they are required to have these policies in place so that the employee health and safety is safeguarded. Maintenance of operating standards, for example, on how to follow up customer complaints. Without a policy manual, there would also be some inconsistencies and distortions on how customer complaints have to be attended to. Then maintenance of efficiency on, for example, how to process an application. We have already covered that. Maintenance of security, for example, how to use computer passwords and backup procedures. With a policy manual in place, there won't be any hiccups when it comes to the maintenance of security. Now, the main types of transactions undertaken by a business and the key personnel involved in initiating, processing, and completing transactions. We also need to have this background as we go forward. We need to understand, what will be going on within a business setup. Remember, the topic is on business organizations and accounting procedures. All right. So let's talk of purchase transaction. The purchase of raw materials. Suppose it is a manufacturing company. We need to know what or how are purchases transactions started or ignited or implemented. All right. Purchase of raw materials. The process is initiated by warehouse or factory staff who may determine the need for reordering. Okay, we do not want a situation where a guy or a lady who works at tills in the shop floor come and start to, initiate a purchases transaction. That's not their area. All right, that process should be initiated by guys from the factory or warehouse who know that there is need to reorder some stocks. So, which document should be prepared, or where should that process be initiated from? What type of document do we have to complete? Obviously, we have to complete a purchase requisition. So these guys in the warehouse have to complete a purchase requisition. All right. So a purchase requisition is raised by factory personnel or warehouse personnel, and it is being forwarded to the buyer. Then the buyer finds the appropriate supplier. All right. When he finds the appropriate supplier, he then has to complete or to raise a purchase order. This is the document that is sent to the supplier, the right supplier. All right. Now, in the exam, you may be confused where the examiner puts the purchase requisition and the purchase order. The purchase requisition does not leave the firm. It is an internal document that is initiated or that is completed by warehouse personnel. When the warehouse personnel complete the purchase requisition, they have to make sure that their manager or supervisor authorize the purchase before it is forwarded to the buyer. Okay, so the buyer has to actually convince himself that the supervisor or the appropriate manager has appended their signature on the purchase requisition for the authority. Then the buyer then has to find the appropriate supplier for those materials which are being required. Then when he finds this appropriate supplier, he then have to raise a purchase order to them. Okay, we are done on the purchases. All right. Okay, some of the issues that might be considered as well in this purchase is that in the process of finding the appropriate supplier, the buyer, depending on the company and or what is stipulated in their policy manual, some companies would insist that there should be some 3 quotations first, which have to be evaluated, and then the cheapest one, or the quotation that is got good quality materials and cheaper in terms of costs, then is usually preferred. Okay, is usually preferred. But there are certain factors as well that have to be considered on whether the cheaper and quality supplier of raw material is going to be considered. For example, this supplier might happen to be having some financial problems, which means that there is a risk that if we ignore those suppliers who might be a bit expensive but are trusted and dependable, they usually do not run out of stocks and they have got all those items in place most of the time. We might harm our relations with them when we opt to go for another supplier who might be cheaper, but he is just a one-day supplier and tomorrow he won't be there. So we need to consider a lot of things before we make some final decisions. Those are the other issues you need to consider as well. Now, when the supplier receives our purchase order, if they have got the goods, they then supply those goods to us, and usually they have to complete what is called the delivery note, which they give to their driver or of the truck that is bringing the goods to us. When the goods arrive to us, okay, when the goods arrive to us, we have to cross-check the goods with their delivery note as well as with our purchase order to see if what we required are the actual materials which have been brought to us. So we need to verify. Now, if we find the goods correct, we complete what is called a goods received note, and we give them a copy of the goods received note, and we accept the goods, we collect the goods. Now, when those guys return with the goods received note and their delivery note signed by us, they take it to their managers, usually to the sales department, okay, the company, as well as to the accounts department of their company. All right, and then an invoice is raised. An invoice is raised for those goods which they supplied, okay, for those goods which they supplied, and that invoice is forwarded to us, okay, to both the purchase department as well as to the accounts department. All right, and then the payments would be started. All right, so that's actually roughly what happens. Now let's talk of the sales. These ones are initiated by the customers in the shop. So sales are initiated by the customers in the shop or on the internet. However, in manufacturing setup, the sales or marketing department usually do the initiation after a call from a customer. Usually, you see the guys from the marketing team doing that if they receive a call from a customer. Now, payment to employees. The payroll or salaries and wages department calculates the wages and pass them to the accounts, who then pay. So there is segregation of duties. It doesn't mean that the HR people are going to do everything. All right, they do the issue of recording information about payroll, including the calculation or computation of the wages and salaries. All right, and then after they do everything, they then have to pass those salary information to the accounts department, who will then pay. Now, what about when we want to pay other expenses? The accounting department is usually responsible in that area. For example, the payment of rent, electricity, or telephones. That's usually the prerogative of the finance department, the accounting and finance department. Then, purchase of non-current assets. These ones are usually initiated by an employee who finds the need, gets approval or authority from manager or company accountant. A check would be made to ensure a correct asset has been bought and is functioning as required. Now, the need for effective control over transactions. That's what is called internal control, which is a term given to the system used to control transactions. All transactions should be authorized. That's the first rule. There should be somebody in authority who would have granted us the authority to proceed with a transaction. Then they should be completely recorded. All transactions should be completely recorded. Omissions are not allowed. Then accurately recorded. So there is issue of completing, but the completion should be accurate. So a transaction should be authorized, should be completely recorded. Nothing should be left out. Then it should be accurately recorded. An important part of internal control is known as segregation of duties. I've indicated this when we were discussing about the payment of salaries, where we see the HR and the personnel department and payroll department doing all the computations of salaries and wages, but they have to pass on the information to the finance department, who will then pay. That's segregation of duties. But you would also discover that within the finance section, no individual should do everything. All right, there is somebody who is recording those information on certain documents, and then there is somebody who is doing the actual payment. There is need for people to do different things at different stages. So this means that transactions are broken down into different stages with a different person being responsible for each stage. We do not want a situation where one individual does everything throughout. Now, let's talk of the principles and practice of double entry bookkeeping. Now, the basic principle of double entry bookkeeping is that there are always two entries for every transaction. There are always two entries for every transaction. There's no way you are going to say one entry is enough. When we are talking of these entries, we simply mean that one of the entry is known as a credit entry and the other a debit entry. The following table suffices. Let's talk of a particular account name. Let's say this account could be a cash account. Okay, a cash account. There is what is called a debit and a credit. All right. Now, there is this acronym I want you to understand before we talk much about this cash account. All right, let me try to find another pen. Okay. There is the PARLS acronym, where we have got PEARLS. P stands for purchases. The purchases. Okay. E stands for expenses. A, assets. Okay. Now, R stands for revenue or sales. L stands for liabilities. Then S, share capital. Share capitals. All right. Now, These guys, the first three, the PEA, are increased by debiting. But these guys on the other side are increased by crediting. When we credit, we will be increasing them. Alright? That's the background I want you to understand. We have always hinted in our every bookkeeping lecture that the PO's acronym should be resident in our mind, should be our torch bearer. Alright, the PO's acronym should be our passport for us to understand accounting. Okay, now let us go back to our cash account. Alright, so every account is going to have a name. Alright, so there is a debit side as well as the credit side. So just imagine the PO's acronym in your mind. You must have the PO's acronym at the back of your head all the time. So the debit side means increase in assets. I have indicated here because assets are part of these first letters. Okay, they are represented by the A. Okay, the A, that's the assets. So whenever we are increasing assets, we have to debit. This is the debit side. Mean that there is an increase in an asset or increase in an expense. The expense is this one. So this is why I said when we are increasing these first three, we debit. All right. So let's say the cash account. Cash is an asset. Cash is an asset. Okay, cash is an asset. So whenever we receive cash, we are going to write it on the debit side. For example, let me just write here cash account. Cash account. If we receive money, we simply say received. Let's say from D. Stanley. Okay, D. Stanley, let's say $80. We write it on the debit side because we are increasing money. So we have to write it on the debit side if it is an asset. Okay, if it is an expense, if we are talking of an expense, let's say rent. Okay, we paid rent. So we have to say cash paid $50 because rent is an expense. So an expense has got a debit, is increased by debiting. So we write on the debit side. This is the debit side. This is the credit side. Are we together, ladies and gentlemen? Now, there is this part, decrease in a liability. But we said that the liabilities are on the credit side, this side. These are the liabilities. We said that when they are being increased, we credit them. Okay? But when we want to reduce these liabilities, we have to debit. This is why we are saying when a liability is being decreased, we debit. When income is to decrease, income is part of revenue. Revenue, I said revenue, sales or income. Alright, so a decrease in income is a debit. Okay, now the credit side means that a decrease in assets. So when these guys here on the POs, the first PEA, when they are being decreased, going down, we credit. When they are going down, we credit. So a decrease in expense, we credit. But an increase in liability, these guys, an increase in liability, the L here, we have to credit. Okay? Then increase in income again, we credit. So simple. That's the double entry, ladies and gentlemen. That's the double entry bookkeeping system. Always remember that one of the basic principles of double entry outlined in the previous slide is that for every debit entry, there is an equal and opposite credit entry. Remember also that the owner of the business is treated as a separate entity to the business itself, and the amount that the owner puts into the business is a special payable. It is a special form of liability to the business known as capital. That's the name we refer to. This is why we say that there is some issue of share capital, but to sole traders there won't be some shares, so we normally call it capital. Alright, for a sole trader it is simply called capital. But when it comes to companies, limited liability companies, they now have shares, so it becomes share capital. So these 2 points together mean that the accounting equation will always be assets minus liabilities is equal to capital plus profit minus drawings. For cost accounting purposes, will be concerned largely with the sales of goods, purchases of materials, the payment of wages, and the treatment of expenses. So here is a brief reminder of the basic double entry that you are likely to come across. So these are the double entry you are likely to face. So whenever you sell goods, you're going to debit bank or receivables. Alright? Why are you debiting bank? You have sold an item. When you sell an item, you have to debit bank because you are receiving cash. You are receiving money into your bank account. So the bank account is being increased, so you have to debit the bank account because the bank account represents an asset. It is an asset. There is money in the bank. Okay, so we have to increase the bank by debiting the bank and crediting sales. Because remember, on our POs acronym, let me just replicate the POs here. POs. We said that these ones are increased by crediting, these ones increasing by debiting. So revenue is also called sales. Okay? Revenue. Alright? That's sales. Alright? We are receiving money after selling goods. So when we sell goods, we usually receive money. Alright? So there's some income. Alright? They will be receiving income. Alright? So we credit sales and debit bank. The money is coming into the bank. But sometimes we don't receive money there and then. What we have to do is we have to increase the receivable. These are credit sales. Okay, credit sales. All right. There is possibility for us to receive money in the future. All right. So we call that one receivables. We're going to receive the money in the future, but not today. So these guys are credit sales or credit customers. Let me just say credit customers. credit customers. We are going to receive money from them in the near future. So they are our assets as well. They are our assets. All right. So in this case, the customers are receiving goods, so they are being debited. All right, or they are acknowledging a debt. So we are going to debit them, and then we are going to credit sales. All right. So it's either you debit the bank if the payment was made there and then, or you debit the receivables. All right. So one of them should apply. It's either you debit the bank or debit the receivables and credit the sales. All right. What about if these guys pay, if the receivables pay now? So on this second part, if the receivable pay, the bank is going to be debited and you have to credit the receivable. Why are we crediting the receivable? We have to credit to cancel their receivable, to cancel their debt. Initially here, we had debited them. So to reduce them, we have to credit. Are we together, ladies and gentlemen? Because they have paid, we have debited the bank and we have to credit the receivables. What about when we purchase materials? When we purchase materials, materials are assets. So we debit assets and credit the bank because the bank is losing money. We are making a payment. But if we are buying those materials on credit, then we have to credit the payable. Not the bank, but the payable, because we are going to pay in the future. What about when we are making payments of the payable? When we are now making a payment, suppose we're given the materials on credit, we are now making a payment for those materials. We have to debit the payables because we have reduced it, we have made a payment, and then credit bank. Remember, bank is an asset, but when we want to reduce an asset, we have to credit the asset. We are crediting the bank because money has left the bank. Now, payment of wages. Wages are expenses. So, we debit the expense account, wages, and credit the bank because money has left the bank. This is for the net wages. The full picture is slightly more complicated, and this will be dealt with in coming lectures. We're going to deal with that in the coming lectures. Now, payment of expenses or overheads. You simply have to debit expense or overhead and credit bank or payable. So it's very simple. Just know the PL's acronym should always be by your side. Now, the use of ledgers and prime end records in both integrated and interlocking accounting systems. A ledger is simply a book. There are three main ledgers, namely the general or nominal ledger. This is where double entry comes into play. Or the double entry bookkeeping we have been talking about occurs in the general or nominal ledger. Sometimes the examiner might say the general ledger, okay, the GL, but it is also called the nominal ledger. Do not be confused. Okay, but they are what are called memoranda books or memoranda records. These are usually two: the payables ledger and the receivables ledger. Payables ledger is for purchases, credit purchases, or creditors. Is sometimes called creditors ledger or purchases ledger. Okay, you need to be comfortable with this. The receivables ledger is also known as debtors ledger or sometimes called sales ledger. They are memoranda records, memoranda accounts. There's no double entry that is happening. So, although the total amount owed to suppliers in the payables ledger is recorded in the general ledger, details of exactly what is owed to whom are also recorded in this particular ledger, the payables ledger. It is sometimes called a personal account or a personal record for creditors. Okay, those suppliers who have supplied us goods on credit. All right, so their personal accounts or individual accounts are found in the payables ledger. What is found in the general ledger here, this general ledger, is the total of all the payables or the receivables. Please do not be confused with this. The receivables or ledger or payables ledger all contain the personal accounts of either customers or receivables. All right, their personal account. Individual customers are found. The amounts being owed by those individual customers are found in the receivables ledger. The amounts we are owing to individual suppliers are found in the payables ledger. But by the end of the day, the totals of either the receivables or payables are found in the general ledger. Okay, remember a topic in the financial accounting lectures where we talked of the way the data is gathered from books of original entry. All right, we said that for example, the receivables, we have got a sales day book. Okay, in this sales day book, we have got information that goes to the sales ledger or receivables ledger, as well as information that goes to the general ledger. We said that in the general ledger, there is total information that is taken there from the sales day book. That is the total of all the receivables is cast and then taken to the general ledger. But from the same book, the same sales day book, individuals, line by line, the entries are then taken to the sales ledger to particular individuals' accounts. It's very simple, isn't it? Sorry. Now, a prime entry record or book of prime entry or original entry is where a transaction is first recorded. These records consist of, there is a cash book. Okay, this records amounts paid into and out of the bank account. Then the paid cash book. This records small amounts of cash paid for day-to-day expenses such as buying postage stamps and teas or coffee for office. Then the sales day book, sales invoices issued to customers. This is the book, the SDB I have just talked about. Then purchase day book, the purchase invoices received from suppliers. Then the journal, where adjustments such as correcting errors are first recorded. Some businesses also have sales returns and purchase returns day books. So these are the books of prime entry. Okay, now in manufacturing businesses, two types of information are needed. There is financial accounting information, for example, the amounts paid to purchases and wages. These are amounts that appear in the financial statements published by businesses every year. Then we've got cost accounting information, for example, how much materials and wages go into each item produced. This information is used internally by the company. So you can see that financial accounting information is the one that goes out to the public, while cost accounting information is internal. Then the same transactions may therefore have to be dealt with in two different ways, once for the accounting information and then again for the cost account information. There are two approaches to these requirements. Either we use an integrated accounting system where information is recorded once for the two separate purposes. This can save time and effort at the recording stage but might increase effort at the presentation stage. Then comes an interlocking accounting system. Here, separate ledger systems are maintained for the financial information and the cost information. This increases the recording effort but can be more efficient later when presenting information. So it's about the choice by businesses. Sometimes you just have to integrate everything so that you do everything once and for all. But this has got some repercussions when it comes to the presentation stage, where you need to make a lot of adjustments. Now, the functions and benefits of a computerized accounting system. Alright, when we have computers, it means that information is going to be provided very quickly. Alright. So there is faster provision of information. There is provision of information that would not be easily available without computerized accounting systems. Alright, so some information could be very complex to produce manually. So we need to have computers on our side. Now, once the system is set up, the information production or provision becomes cheaper. Alright, so the computer system might be a bit expensive to install or to have, but in the long run, it becomes cheaper to the business because information would be gathered and produced very, very cheaply. Then, there is improved accuracy in the way information is disseminated because arithmetic and certain other errors would be eliminated in a computerized system. Of course, we need to be careful of the concept of garbage in, garbage out, the GIGO, because computers themselves, they are simply machines. They are simply machines. So if you input corrupt data or incorrect data, then do not expect computers to make miracles. They are not Jewish prophets. They are going to just produce bad or incorrect information. So that's the GIGO, the garbage in, garbage out. Now, let's draw some diagrammatic representation of a computerized system. We are having a situation where we have got this first box here representing the input of data. Input of data. Then the data goes into what is called the processor. Processor that processes data. Processing of data. Then we have got the output of information. Output of information. Okay, but there are some certain processes which will be happening here, which would be computer files. These would be consulted in the process of processing data, the computer files. All right. So, for example, when we talk of input, these could be orders. Input, orders which are input over the internet. So the computer system will be gathering those orders which are being input through the internet or over the internet. Then processing. Prices are accessed on a product and the order value worked out. Okay, and the customer's account in the receivables ledger. Remember, on the computer, all right, is automatically debited. That's part of the processing, right? And in that same vein, inventory records are updated. So a customer has collected the goods, so the system has updated his account in the receivables ledger, but at the same time, the inventory records have to be updated for the reduction of stock, because certain items of stock have been bought, have left the company, so the inventory has to go down. What about output? An invoice, a sales invoice, is printed for the customer. Okay. Also, dispatch information is displayed on a screen in the warehouse to show the goods that have to be sent, depending on how sophisticated the computerized system is. All right, so this is just a snapshot of what would be happening in a computerized accounting system, as indicated by this diagram. All right, but now there are important terms we need to consider as part of our learning agenda. That's what is called a file. A file is a group of similar records. So a receivable ledger file contains records for each customer. All right, so information about each customer is contained in the receivable file. All right, so a file, an example of a file, we are having the receivable ledger, the payables ledger, etc. What about a record? Each record refers to a single entity, so a customer record will hold all the information about a customer. A product record will hold, so records are collected together into files. So an example of records, we are talking of in a customer account, or supplier account, individual supplier account, or individual customer. What about a field, also known as an attribute? Each field holds a separate piece of data relating to a record. Thus, a customer record would have fields for the name, address, telephone number, credit limit, invoice, outstanding. What about a key field? The field that uniquely identified a record, for example, a part code or an employee number. And a character. Characters make up fields and are typically A to Z, 0 to 9. Often a character holds no meaning on its own, but occasionally a character will be the whole field. For example, M or F for male or female. So you need to just read around this area to understand more. But let's see if we still have other terminologies. Okay, now the type of data held can be divided into transaction data. This records information about each transaction, and this data changes often as transactions progress and are completed. But we also have got what is called standing or reference data. The data that is relatively permanent, such as names and addresses of customers or suppliers, descriptions and prices of products. That's standing data. They don't usually change. They remain as such for a long time. Although in countries where there is inflation, you would see that prices often have to be part of transaction data. They would be changed almost very often or frequently. Okay, but that would be very, very rare. That type of inflation would be very rare. But there are some countries where such inflation exists, all right? But usually prices are also considered to be part of standing data. Okay, so in general, there are two types of processing that can be carried out. There is what is called batch processing and real-time online processing. Real-time online processing. Batch processing refers to a situation where transactions are accumulated into batches and then all processed together. Because transactions have to be accumulated, it means that there is a delay in processing them, so the information held in the accounting system is generally out of date. For example, if sales transactions were accumulated during the week and processed to the receivables file on the last day of the week, for most of the time the balance shown owing from each customer would be understated. The balances would be correct only just after processing. Batch processing is not so common now because of the issue of computerized systems and the needs for ease of doing business. Most customers prefer, or most parties to business transactions, they would prefer real-time evidence of their transactions. The higher need for digital communications, that is giving pressure on businesses to adopt real-time business means. All right, so everything has to be updated. So batch processing is losing its luster. However, it can be automatically or abruptly rejected because there are situations when it is of paramount importance. For example, in the processing of wages, you will discover that there is actually need to accumulate data. You can't pay every employee as you punch their figures individually. That would bring despondence in a company because employees usually prefer to receive their paychecks at once with others. No one wants to be paid last. So there is need to accumulate data to ensure that the data is correct before it is processed. Somebody has to come and check and so forth. So batch processing is too needed, is too common as well by the end of the day. Now, real-time online processing. Real-time means that files are updated as transactions happen. So online means that the files are permanently accessible to be updated. For example, when you withdraw cash from a cash machine, the machine can access your bank account record to see if you have the funds. When you take money out of your bank account, is immediately updated. So when you take money out of a bank, the account is immediately updated real time. All right, so you also need to understand what the online element stands for. It simply means that the other parties which have to be consulted are readily available all the time. Okay, it doesn't mean that it should be connected to the internet. All right, that's not the meaning of the online here. The online simply means that that other part that is to be accessed would be ready for access. All right, it would be online. All right, so that's what would be happening. Now let's talk part this in this our last part. Let us discuss management information. This is information which is used by managers to plan the future of the business. For example, future cash flows and whether borrowing will need to be arranged, whether more employees need to be recruited. Then control. The progress of the business needs to be controlled. Okay, for example, whether budgets set in the planning stage would be met. Lastly, decision making. For example, what to produce or which branch to close. Obviously, managers of different departments will usually require different information. However, managers at different levels within a department will also need different information. For example, senior managers will often require more summarized information so as to see the whole picture, whereas more junior managers often need more detailed information. So this is the difference. The guys at the top, they just need some summaries. You don't give them a 200-page report. Then they actually do not have the time to read everything. So summaries are required at the top. But below here, we need detailed reports. Okay. Now, you might be asked to compare cost and management accounting with financial accounting. All right. Cost and management accounting is usually done on a monthly basis, whereas financial accounts are an annual thing. All right. Cost and management accounting usually reports both historical information and future information. We will be talking of the budgets for the next period. But in the case of financial accounting, usually the reports, remember this one is management accounting and this one financial accounting. That's cost and management accounting. Alright, so financial accounting reports are usually centered on historical information, okay, where we have got the statement of financial position, income statement and cash flow statement and notes. Then management accounting can be in any format management finds useful, but the format for financial accounting is strictly controlled by law and accounting reporting standards. Cost and management accounting does not have to be audited, but financial accounts are usually audited by an independent auditor. All right. Lastly, management accounts are produced for management, but financial accounts are produced for shareholders or owners of company. Now, what is data? Data is raw fact. Information is data with meaning. For example, a record of the height of everyone living in a city, in a certain city, would be data because there is no much use. Once that data is processed and, for example, summarized into average heights of men, women, etc., then the data becomes more interesting and useful. Similarly, a list of all unpaid invoices is data which only become meaningful or informative once sorted by customer to show what each owes and also perhaps presented in descending order so that the customers owing most are shown at the top of any list. Now, remember the computerized system diagram above. Now, features of management information. Ladies and gentlemen, you need to have the accurate acronym cast in stone in your heart, because this one is always going to come. Accurate stands for should be some accurate. The management information should be accurate, should be complete, should be cost beneficial, should be user targeted, relevant, authoritative, timely, and easy to use. Now, when we are talking of accuracy, okay, certainly accurate the information should be certainly accurate enough for managers to use confidently. Some managers need information accurate to the last cent, while others are happy with accuracy to the nearest 1,000 bucks. So some of these issues are also linked to the risk appetite of a business, right? And the size of the company, right? A $1 billion company can't actually worry much about a variance of 1,000 bucks, while a $100,000 company might be very inquisitive for any variance more than $100. So it depends with the company and the circumstances surrounding it. Alright, the information should be complete, which means that missing information can be very, very serious. For example, omitting a cash flow that will happen next month could be fatal for a business. The information should be cost beneficial. There is little point having information which costs more to provide than any benefit that arises from it. The information should be user targeted, which means it should be what users need and nothing else. For example, senior managers often have to be planning for the future, so need forward-looking information. The information should be relevant. Too much information causes information overload and might mean that important matters are overlooked. The information should be authoritative. What is the information source and reliability? Just because you find something by Googling the internet does not mean the information is correct. The information should be timely. The information should be received quickly enough to be of use to the decision maker. Real-time online systems can speed up the supply of information. Lastly, the information should be easy to use. The information should be well set out and described. Sources and categories of information. The main sources of information are internal information, for example, from the ledgers and primary entry books. Then, it could be external information, for example, government statistics, the internet, etc. The limitations of cost and management accounting information. Potentially, all the matters covered by accurate, complete, cost beneficial, user targeted, relevant, authoritative, timely, is to use. If the information should be accurate, then it means that it is difficult to accumulate, or it is difficult to prepare. All right. Also, when information needs to be complete, then benefit preparing it might be outweighed by the costs. All right. We have also learned that the information should be cost beneficial. This also means that there is a whole lot of issues to be considered before the information becomes useful. All right, you need to have so many worries in the preparation of the information, which by the end of the day would make the information more expensive. All right, then user targeted. Being a requirement for the management information, this means that there is also a hurdle in the preparation of this information because we do not know what exactly the manager wants. The information should be relevant. This again makes it an issue of concern, okay? Because sometimes the information that is required would not be available at that particular point, but it should be prepared. All right? Or sometimes all the information might come up that was required, but out of time. All right. Then, how do we know that this information is actually very authoritative? What source exactly should be consulted? Since management information is not guaranteed or is not regulated by anything, how then do we believe, or shall we say that this information or this information source was or is authoritative? So those are the limitations. There is also an issue of difficulty in making future estimates because management information involves techniques like budgeting and so forth, or forecasts. Those might have some errors or might not be realistic, which means that there could be some difficulty in making future estimates. Often quantitative and financial only, but undoubtedly matters such as quality and customer service levels will be important. So here we are learning that this information is usually quantitative and financial. All right. Although management accounting information is also inclusive of non-financial issues, it is also largely financial in nature or quantitative, which means it might end up neglecting other issues, for example, customer service levels and so forth. It can be difficult for managers with no financial training to understand. Often too inward looking, being internal, it is actually inward looking. For example, perhaps it does not give information about competitors' selling prices. So those are the limitations of management information. Okay. Now, let's discuss about the role of a trainee accountant in a cost and management accounting system. All right. A trainee accountant is likely to have the following roles in a cost and management accounting system. All right. Recording transactions, for example, posting to the ledgers. This is why I said that this module, being the first of your modules, one of the first modules in your Acca journey, you need actually to have a solid grounding in the concepts you are going to learn in this particular module. You also have to consider the importance of this first lecture. Okay, it's our first lecture. Just put some power supply. Let me plug in the laptop because we're gonna have a problem if we have the laptop. Okay. So let's go. The purpose of, the role that can be played by a trainee accountant is that, okay, by making by posting transactions to relevant ledgers, all right, or extracting information and presenting it for management use. For example, a comparison of budget actual figures for a period. A trainee can be tasked to do this. All right. Investigating financial matters, for example, looking into an overrun in a cost. All right. Helping with budget preparation. Although it is not his responsibility, he could be tasked to help the manager or the accountant with the process of budget preparation. Then helping and supervising more junior staff. He is also charged with that duty. Note that a trainee accountant will generally not be closely involved in decision making and planning, as these functions will normally be carried out by more senior staff. So yours would be to provide assistance to those guys. I hope you have benefited a lot in this presentation. All right, much of the work is too theoretical, which means that we need to read around and enhance our learning as we start or embark on this Acca journey. I wish you success, but I also plead with you to continue replaying this video, understand more about the concepts which should be your bedrock as you navigate this intellectual territory. Do not forget to subscribe to our channel, as well as to like this video and to share it to your friends and peers, so that we are known, so that the school continues to grow. You know what? Please do not forget to do the right thing. We need to learn to subscribe to videos which are useful to our lives. This is part of your learning. I hope you have enjoyed everything. If there are some issues or some gray areas you feel I should attend to, please always get in touch with me so that I explain everything. Transcal Consulting Services is there to cater for the Transcal Consulting Services students. But if you are not yet a student, please do not feel like you are being left out. Just get in touch with us. We talk. You formalize your learnership with us, and then we continue doing the business together. I also hope that the video is also been helpful to your own studies, even if you are not my former student. Just continue to enjoy, but please do the right thing. Subscribe to the video. This will also help you to get more videos as I produce them. But you can also consider clicking the notification bell so that you'll be alerted whenever I upload videos related to the Acca qualification. Until next time, may the good Lord continue to bless you abundantly. Okay, I am signing out.